In the last 2 years, non-fungible tokens have become one of the most used and well-known parts of Web3. NFT data recorded on blockchains can be linked to files containing various forms of media, such as images, videos, or audio, and then is sold on the market. Back in 2021, NFTs saw an astronomical rise in popularity, but this year has been the opposite. Today, we're looking at the current situation of NFTs. First off, why was there a sudden boom in the market during 2021? Only a small handful of crypto enthusiasts knew the importance of non-fungible tokens at the start of 2021. But as recent figures show, by the end of the year, around $41 billion have been spent on NFTs, making the market for digital artwork and collectibles nearly as valuable as the entire art industry. Though the initiative was first popularized in the art world, corporate players in sports and music, including former U.S. First Lady Melania Trump, have embraced it in order to capitalize on the buzz and find new ways to engage with followers. The American Basketball League has its own NFT marketplace called NBA Top Shot, where they buy, sell, and trade video highlights of its players. Other viral hits, such as CryptoPunks and Bored Ape Yacht Club, were numbered collections of NFTs that represent the exclusivity of their owners and are usually used as avatars on social media platforms. The core value of these tokens is still their exclusive nature due to their high cost. In multiple instances, you're even allowed entry to private online chat groups on Discord or parties, where you're surrounded by people with high net worth. During the social lockdown brought about by COVID-19, NFTs became the new hot thing, and everyone wanted in due to the sense of community and also the uniqueness that holders would possess. Moving on, what's happening to NFTs in 2022? While most of the attention has been on the downfall of the cryptocurrency market in 2022, the equivalent collapse of the non-fungible token market has largely gone unnoticed. Consumer trust in the NFT market began to decline, with the number of market participants continuously decreasing since February 2022. According to blockchain analytics firm Chainalysis, the number of addresses dealing on NFT marketplaces in a given week dropped by an astounding 88% in June. Besides this, the average price of an NFT sale has plummeted by 92% since the beginning of May 2022, falling from the initial value of $3,894 to $293 in July. Earlier this year, the floor price for BAYC dropped below $100,000, only to recover with the cheapest Bored Ape recently selling for 73 Ether, or $125,000 on OpenSea. This year also saw users losing their Bored Apes due to a user error called Fat Finger, which led to NFTs worth hundreds of thousands being sold for far less. Furthermore, daily NFT trading volume on OpenSea was down over 99% in September from its peak of $405.75 million on May 1st, according to DApp Radar. BAYC now has a daily trade volume of only $400,000 in individual collections. Due to these numbers, experts have predicted that the value of NFT projects will fluctuate in the future. Now, what do the experts make of the crash and fall of the NFT market? In the eyes of global data analyst George Monahan, the extreme decline faced by the market only points towards its eventual death, at least for a while. According to Monahan, NFTs were such an obvious bubble, and he believes people won't return to them for a long time. On the other hand, Chainalysis economist Ethan McMahon believes that even though the death of the NFT market looks apparent, it's a much-needed shakeup that'll move the market away from NFTs without any additional help. This is important as shifting the attention from crypto assets such as avatar images to innovative cases like gaming, royalties, and ownership of real-life assets will prove to be a better step for NFTs at large. Then there are those who compare the NFT crash to other economic cycles. Anjum Malik, co-founder of private cryptocurrency hedge fund Manhattan Crypto Capital in New York, sees the current situation in the NFT market as just a cycle, like in real estate. Malik believes that everything that rises must inevitably fall. Like McMahon, he also sees the bright side of the market's current situation. He claimed that everyone has been waiting for this opportunity to purchase for the future, and just like real estate or stocks, most people advise buying the dip. Malik believes that the NFT market will innovate, and he has high expectations for many other industries, including digital real estate. According to him, the NFTs are moving past art and into other sectors like real estate, healthcare, food, and entertainment. Now, why did the market collapse in the first place? Starting off with the simplest reason, the lack of trust consumers have in the creators. A significant chunk of the NFT business consists of shady developers selling simple assets in marketplaces. Given the ease of putting up a website and selling inauthentic authentic art or sports memorabilia. This was an ideal opportunity for scammers. And of course, the market reacted accordingly, and prices dropped dramatically due to this weak response to shady tactics in the NFT industry. Then we have the consequences of FOMO being one of the major drivers of the tremendous increase in the NFT market. Now that prices have suddenly dropped by a huge amount, investors are concerned about making a risky move. They've lost interest in these NFTs as they're only selling basic digital assets currently. This is made worse by the fact that many of these low-value goods are located in a small number of markets. This makes investors feel very uncertain. Finally, the primary attraction of NFTs was their value in the real world. Anything sold on a marketplace can be resold afterwards. But while this is excellent for digital art, it's useless for digital assets such as apparel or sneakers. Because there aren't any clear uses for such NFTs in the current world, it's difficult to understand how these products would ever be valuable. As a result, practically all the popular NFTs are works of digital art. And while controlled marketplaces can help enhance the value of NFTs, if the underlying blockchain project fails, they simply won't be worth much. Since the current state is pretty volatile, there's no telling what exactly will happen in the future. So let's look into what else is going on in the NFT market, starting off with the British artist who burnt his artworks after people purchased the NFTs instead. On October 11th, Damien Hirst began destroying hundreds of his pieces after collectors elected to keep their non-fungible tokens instead. Hirst, who rose to prominence during the 1990s, the young British artist scene, released his first NFT collection, The Currency, in July 2021, with 10,000 NFTs equating to 10,000 original artworks featuring colorful spots. Collectors were given the option of keeping the NFT, which reportedly sold for $2,000, or exchanging it for the real artwork. According to the Newport Street Gallery in London, 5,149 people chose the latter, while 4,851 chose the NFTs. Non-exchanged NFT artworks were said to be destroyed and vice versa. On October 10th, Hirst announced to his Instagram followers that he'd burned 1,000 artworks. This wasn't some display of anger though. He did it in order to complete the transition of the artworks from physical pieces to non-fungible tokens. Next up, a physical studio is being built to bring NFTs to the real world. Mike Beeple Winkleman made major news last year with his record-breaking $69.3 million sale of NFT artwork at a Christie's auction, which was followed by a Time magazine cover and appearances on The Tonight Show. Now he wants to bring the NFT world to even more people by opening a physical studio that'll host exhibitions. In a thread on Twitter, Beeple talked about the purpose of the space and clarified that it would be an outlet for the entire community of digital artists. He plans on hosting exhibitions and finding innovative ways to bridge the gap between real-world patrons and NFT artwork. The inspiration behind this project is to essentially just bring people together through another medium of art, but in person rather than through digital communication. Finally, the Bat Cowl collection is bringing Batman into the Web3 NFT space. On April 26, 2022, DC, in collaboration with Palm NFT Studio and Daz 3D, released the first ever official Batman NFT to hit the market. While that may not be the first non-fungible token to come from DC ever, this is definitely the first time that the iconic character has appeared on the blockchain as an official release. The collection features different kinds of Batman masks from all the different eras of the franchise's 83 years of running. DC Comics had anticipated manufacturing over 200,000 NFTs with the release of the Bat Cowl for $300 apiece, but only about 12,000 are currently available in the DC Universe store, bringing the company on par with the other 10,000 commercially successful supply PFP systems. And that's all for this video, guys. What are your thoughts on the current state of the NFT market? Let us know in the comments below. Don't forget to give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.